many of you know, India's Credit Bureau. Okay, I think we are ready and good to go. So without spending any more time, let us directly get into the session. Could I request all you gentlemen, ladies? Okay. If you could just make way, we would like to begin the next session. Yes? Because the experts are already here. We have the panelists and moderator here already. So let me request all of you one more time for your kind cooperation. If you could settle down, we will be able to begin our next session. Okay then. So here we are into the penultimate session of the day. Let us begin. The session moderator, Mr. Vivek Mandata, MD and partner BCG, is here already. So are the panelists, Mr. Bibhu Prasad Mahapatra, Executive Director, Punjab National Bank, Mr. Rajiv Mishra, Executive Director, Bank of India, Mr.Salee S Nair, MD and CEO, Tamilnad Mercantile Bank, Mr. Debajyoti Ray Chaudhuri, MD and CEO, NeSL, Mr. Rakesh Singh, MD and CEO, Aditya Birla Finance, and Mr. Prashant Muddu, MD and CEO, Jocata. So, gentlemen, I will leave the stage to the session moderator, Mr. Vivek Mandata. Over to you, sir.
Good afternoon, everyone. It's my honor to be sitting here and discussing a very interesting topic with this esteemed panel. We've all been speaking about how the world of data is changing around us. I was just listening to the earlier panel a little bit about how the consumer is changing. With the changing consumer, we have their data and their behavioral patterns also changing. It's a great segue into this session as well. And of course, with us becoming more and more digital in the way we live and operate, there's a lot more data available in today's world than what it was before. We've always spoken about data being the next oil. I think through the session today, I'd like to explore if we've already captured that oil well, or is there a journey to go. Let me start with the first topic on hand, which is we've spoken about GST data for a while now, that the formalization of the economy, whether it's the small businesses coming into the fold, GST data being transparently available now through in electronic architecture itself, UPI data as well as granularized some of these smaller businesses data availability. So over the last 3-4 years, as this data has come in, what change have we seen come into the market, right? So maybe I start with you, Mr. Salee, to see, right, what have you seen change in how we have been able to use these data points?
Thank you, Vivek, for the question. And if you look at the last few years, and Vivek did mention that data is the new oil, right? The oil is really oiling the banking industry. And how it is doing it, he did mention about the GST. He did, the digital public infrastructure that has been built up significantly is helping the banking system in harnessing this data, processing this data, and making, is able to decision based on this data. You did mention about the GST. I think that's a great, that's a big oil that is coming into the system, and particularly the MSME sector is being helped at. The data that is provided by the GST, in fact, is becoming a source for the BRE. If you look at most of the major banks, as opposed to earlier times, when the decisioning used to happen manually, these days the decisioning is happening, particularly for the smaller segments, where the HR focus is not viable enough in the smaller ticket size. It's happening on the BRE. So most of the banks have now set up BREs which are using data from the ecosystem, whether it's the GST, whether it is the ITR, whether it is the transaction data, whether it is the CAC inputs, whole variety of data that is available is being taken in, and the BRE is able to give a decision. And particularly, of course, looking at the risk of each of the bank, to what ticket size it can go, they have put cutoffs. We were talking about 1 crore in the morning. I think the SBA was mentioning that they are trying to ramp it up to 50 crores. So that's a major change that has happened in the past few years, which is the role of business rule engines in decisioning. Yeah.
Thank you. If I may ask you the same question, Mr. Mahapatra, about what are you seeing from a large public sector bank perspective?
Thank you. So, as my friend has already told, that I can say that before India became economically advanced, now we can say that yes, India has become a digitally advanced country, and the digital explosion in the economy and the emergence of fintechs, the government, the regulators' initiative, and favorable government policies, the entire landscape, economic landscape has changed drastically. And there are n number of datas, and the source of data has also increased. Earlier, in the banking sector, we generally, as rightly told, give collateral-based financing, where we don't have that transaction-based financing. And with the development of infrastructures, just latest is the ULI, just like UPI, the regulator has said that unified lending infrastructure. That transformation has given the banking sector, just not the banking sector, NBFCs and all lending sphere, it has given it large number of data which can be harnessed. And just my friend has already told that it is the GST filing, then UPI transactions, payment systems. In addition to that also, sir, so many new data sources has come into picture, so that only except the collateral-based lending, it is very easy for the banks, financial institutions to assess risk assessment of the entities based on their transaction data, based on their filing of GST. So, yes, earlier the underserved or unserved, the strata which are not coming to the financial sphere, now with these technological advancements and integration of the data, these sector, which is earlier small marginal farmers, small MSME units, they are getting the benefit of the banking facility.
Thank you, sir. If I may move to Prashant. Prashant, you were speaking about, when we were chatting earlier, you were speaking about how GST data from being a raw transaction data can become a score by itself, right? And beyond being a score at an individual level, there's also macro use cases for GST that can come into play. Do you want to throw some light on that?
Yeah, so when we look at alternate data in 2017, when we started looking at this, at that point GST was an alternate data set. And I think around 2018, once the data itself stabilized, I think it's on. Yeah, I think it's on. So one of the things that because given the power of the information from both sales and purchase side, you get the HSN data, which tells you about the products that they're dealing with. So it has become a very powerful tool, I think, as the previous speakers have elaborated, in terms of profiling a customer and a lot of data. It is also helping in triangulation of information. Let's say if I see a certain amount of sales in my GST information, do I see some flow of that into the banking set. And then what can I triangulate so I know whether there's one bank account, there's maybe multiple bank accounts, and I'm not seeing the full picture. So all of that. But the other interesting part of this from an alternate data perspective is when you can anonymize that information. We built an index at a country level called Sampurn. Today we have over 300 institutions that have subscribed to this index. It's a macroeconomic index for the MSME economy. And what that does is able to give what we think is a missing link in a bank's credit architecture, which is a macroeconomic view of saying, this is how either we are seeing changes, let's say the textile sector up north versus the textile sector down. And so maybe you could make a more contextual decision in addition to the entity level decisioning that we are all using these data points for from that perspective. Or we can hone in on, like we're saying, if there is a push towards defense and manufacturing, or if there is, we are seeing any geography specific indicator. So we can cut it by various sub indices if you want to create a scheme for women, let's say, women entrepreneurs. So there's a lot of information that comes out of this macroeconomic index, and that we think is a missing link in the credit architecture that could also benefit financial institutions. And we have over, I think, close to 30 institutions that subscribe to this as a data feed itself, and then 300 institutions that read this monthly index that we publish.
So Rakesh, as you dabble from the NBFC space, right? So a lot of times the move from informal lending to formal lending starts with the NBFCs. That's a segment that you cater to a lot. How has that changed with the evolution of, let's say, the data that the individual entities have or the individual consumer has now? What has that unlocked in terms of ability for us to penetrate that informal segments?
So completely for both the consumer and the MSMEs, the usage of data over the last 7-8 years has really increased substantially. So talking about consumer, if you look at, yes, we use, and now Bureau is quite strong over the last 20-25 years in India, but just looking at the banking behavior, the digital payments which has gone up so much. When you look at a consumer who's looking to borrow, the digital transaction, the transaction behavior of the customer over a period of time, the EPFO data which comes in. I think all of this really, e-commerce platform, when a consumer goes on an e-commerce platform, how many times and what is the value of purchase which he does, in terms of payment wallets, what is the kind of transaction, what is the average ticket sizes. So these can be used to really score and underwrite a consumer. And on the MSME side, if you look at, clearly the GST, the banking behavior, the digital payments, I think these are the things which really helps us determine the cash flows, the turnover of the customer or the small business owner. So it really helps us. What was the challenges earlier to underwrite these customers who were coming from informal segment to a formal segment was established cash flows or statements, which you can really rely on and can underwrite on the basis of that. So I think a lot of data points which have come in, which we are using it clearly in terms of understanding the consumer behavior. We are a MSME focused NBFC, though we do consumer as well, but using the MSME data in terms of their the supply chain, in terms of if they are anchor led, and if they're supplying to the anchors, those data comes on because if you leverage the larger ecosystem, B2B players, we have built a B2B platform called Udyog Plus, where we encourage small MSMEs to register themselves. So a lot of data which is available, which helps us to underwrite these customers and turn it around much faster than what we could do it earlier.
Mr. Rajiv, we were also discussing earlier about, are we leveraging this fully, right? I mean, there's a lot of data available. As an ecosystem, have we done enough to tap into this data well and use it in the maximum spirit?
See, all the speakers have rightly said and put emphasis on the data. Now, data being the next oil or being saying oiling the system, but how well we are using the data, that's more important. Today, if you look at it, if we say about the credit underwriting piece, earlier when we were doing credit underwriting, the time taken was, the TAT was huge. Today, when we have these data points available, the API integrations in place, your decisioning becomes very fast. Your credit models, credit scoring models have undergone a lot of changes. So that all put together is trying to help out the entire ecosystem to see that how we leverage this data. Similarly, the cash flow based statements, you have to need to verify those data. Now, earlier a cash flow based statement submitted by a MSME unit or we need to do some lot of verifications. Now you have GST data, you have income tax data, you have UPI transaction data, you have invoice data already been made available. All these data points can be scored, collated, and as my friend was saying, tranquilization of this data helps us to take a proper credit decision. So this entire ecosystem is helping us to do a faster underwriting, a better underwriting. The loan processing and as well as the cost reduction is there. We are also, as Mahapatra ji was mentioning, to the people where down the line, bottom of the pyramid, where NBFCs are funding, but then banks are also very proactively coming down. So the gig worker economy is there, or small MSME units are there. We are able to know their cash flows. We are knowing their invoices. So all basis that we are able to do that. It is also helping us to do a lot of risk mitigation and improve the overall quality of the product. So data is there, data usage is also happening. Yes, how much we are able to leverage, that's a question, the future will answer that.
And Mr. Debajyoti, we've spoken about a very different data point, right? So far we've discussed GST, we've spoken about the payments data, etc. But your organization also brings to the table something that's different from any other data source. Almost you have a, should I say monopoly, maybe the wrong word, but a sole distribution of that data, right, in terms of the credit defaults that you were speaking about. Would you want to throw a little bit of light on the nature of the data and the usage and the power of that data a little?
So, first of all, thanks for having me here. Now, information literacy, and that's what we are. We are National E-Governance Services Limited. It's a unique institution of its kind. And we are regulated by the Insolvency and Bankruptcy Board of India. Our role is to facilitate insolvency resolutions of corporates under the IBC. But we also have an equally important role to see and anticipate incipient defaults and to ensure that they don't go into insolvency. Now, we are a unique institution in many ways. First of all, any institution which has to submit information to us, it has to do it under digital signature. Secondly, and again, this is unique to us, any information which we get, we immediately present it to the counterparties. So if it's a creditor which submits information, we submit it to the debtors who have the right to accept or dispute the information, of course with a digital signature. Thirdly, and this is the most unique feature of our institution, is that it permits non-regulated entities to submit information. This is the only institution of its kind which permits non-regulated institutions of its kind to submit information. And in the morning, I found that there were representatives of the industry. So if they are still around, I would request you to please take note that this is a repository which empowers you. Your voice can be heard. You can submit information. If your customer is not paying in time, you can submit information to us and your voice will get heard. And I will tell you later how that happens. Fourthly, access. We are not a public credit repository. But interestingly, if there is a default and the default is authenticated in the manner as provided in our law, then every creditor gets information of the same. And this, I would like to relate it to the, through the report of BCG. I remember the two interesting parts of it. One is that new to credit, that's the way forward. That has to go because still, I think associations also pointed out and it's accepted that a large part of Indian is still does not have access to credit, especially the MSME segment, and the delinquency in NTC varies from the one segment from the top quartile to the bottom quartile. There's a huge variance. So how is it that some lenders are doing it differently and efficiently? And we see some live evidence of that, that how we are leveraging the information in the information utility. So we give 3 types of alerts. First alert is the default alert, and this is for all types of customers, companies, non-corporates, as well as individuals. So when a default happens to one creditor, then after a process of authentication, an alert goes to all the creditors of the debtor. Very interestingly, and there are many bankers out here, we would have all seen that the default happens initially to a small vendor, a small supplier. It's only then the default happens to regulated entities. So it is these defaults which are captured because these creditors, when they report the default to us, then after a process of authentication, after validating it through the debtor, then this information is relayed to all the other creditors. So this becomes a very interesting and very useful data point based on which the creditor can take appropriate action. And one more aspect, because I'm sure many MSMEs are also debtors. So very interestingly, this alert goes after giving sufficient time to the debtor. So we give 1 original and 3 reminders. So during this time, if the debtor is able to regularize his account, then the alert to the other creditors does not go. So this becomes a good incentive for the debtors to look for solutions. Either he is able to pay or he can talk to creditors for a negotiated settlement of its debts or to even arrive at a resolution plan. Also, if the debt is disputed, if there's some element of dispute, so that also can be recorded. So when the default alert goes to other creditors, so if it's a disputed debt, so they can at least see it with a different perspective. So one final point I'd like to make, that National E-Governance Services is a public company. It is set up by banks. We have 17 shareholders. We see ourselves as a national infrastructure institution. Our services are easily accessible and most affordable. We are available to everyone to use, whether it's banks, of course, they're already using their services. Many NBFCs are also using the services. And most of all, I would again like to say to my MSME friends who are here, that this institution is for empowering you.
Thank you, Mr. Debajyoti. Now, we heard about a different data point. I think there's more coming, right? As we've seen the announcements from RBI Innovation Hub, there's land records that's coming and come already in parts where the states are already integrated. We have milk data for the agri and dairy distribution coming in. We have satellite data. In fact, in our report, we're talking about climate data and how it can start becoming an interesting predictor. I mean, if we fast forward 3 years from now, I would like to hear from the 3 bankers and from the NBFC CEO on the dais in terms of how do you see these playing a role, right?
Vivek, I think you are alluding to the ULI that has been launched. And for a bank like mine, TMP, Tamilnad Mercantile Bank, which is a legacy bank, and which is now getting onto the technology bandwagon, ULI has come as a great boon. Earlier, I was talking in terms of, the business rule engine, crunching the data and the decisioning. That still takes, for that to function effectively, you need to push data into it. And how do you push data into it? You have data sources all across, and you API with them. You have those data sources, draw the data through APIs. So effectively, what you have to do is For each of this data source, you have to have an API. Now, for a bank that is already on it, it becomes a bit of a challenge because, you already have an API with an existing provider. And to shift to ULI essentially is a data sharing platform, right? Becomes a challenge for some of these banks. Now, that's where we sit on a happy noting because much of it, we are building it right now. So ULI, like I said, has come as a boon for us. And ULI, I am told by the government sources that they will be looking at creating over 100 data points, data sources through which data can be accessed. I think Vivek did allude to a few of them. Digital land records. When we look at your housing loans, when you look at MSME itself, when you look at the bottom of it, often you find that their own contribution is not there. It's very difficult to quantify when we are looking at a MSME that is just about to take off. It's very difficult to figure out. Earlier we were talking about financial statements, etc. I don't think it has any meaning for some of these MSMEs, right? And their stake in the system is also low. How do you quantify it? How do you ensure that they have a bit of a skin in the game? Apart from the guarantees that are provided to de-risk you, to ensure that they have a skin in the game, what we do is that we ask for a small collateral. It is not intended to it is more intended as a recourse mechanism. We ask for a small collateral. And when we ask for a collateral, the whole system slows down. When you look at a BRE kind of decisioning through the BRE and, using data to give you a decision, and you say that, look, in addition to this, I need a small collateral, you have a challenge. I will not be. Normally, we have heard, across the industry, people talking in terms of 30 minutes of a decision, right? I think that's pretty much what has become the industry standard. But when you have a collateral sitting on it, a small collateral sitting on it, the whole process gets disrupted. That is where the ULI's latest, digital, your land records, ability to access land records through it, that he has. Right? Of course, we are still a bit of way. Vivek was talking in terms of what is going to happen in 3 years. Right? I hope over the next 3 years, we will be in a position to have digital mortgages through the ULI platform. I think one of the asks that BCG did in the morning presentation is digital mortgages. In Australia, for example, there used to be a bank called the ING Direct. This is the 5th largest bank in Australia, and they have no branches. And 80% of their book is housing loans, housing mortgages. And how do they do it? This is exactly what they do. So that is something that going forward, I'm sure ULI, the government, the RBI, and will help build a digital mortgage, which to give confidence to the bankers is also SARFAESI compliant, and you are able to take action on that. So that's one thing that I hope is going to happen over the next 2-3 years. And significantly, we hope that some of the data points that are very, very interesting through the ULI, the satellite imagery that we are talking about, the pouring of the milk pouring data, etc., will really, really help us in taking decisions that impact the bottom of the pyramid. So I think ULI to me is a great game changer. It is a bazooka in the hands of the lenders, and I'm sure the lender, the industry, and the banking industry will effectively use it to reach out to the bottom of the pyramid. The other aspect is we all talk in terms of decisioning and giving the sanctions and perhaps even the disbursal. No, thanks to him, we can even e-sign documents and arrange to have it disbursed to the account. So the other piece that we need to solve, which we will hopefully putting our minds together, the industry minds together, is how do we address the collection piece? It is not just about disbursements, right? It is also about the recovery, ensuring that how do we monitor it subsequently, and how do we ensure that these assets that are created through these digital processes, whether it's the BRE, using the underlying ULA, etc., but how do we also collect it back? And I'm sure this is something that we will see increasingly being solved over the next 2-3 years. Yeah, thank you, Vivek.
Sir, just with regard to this alternate data, that is satellite images, land records, sir, in PNB, we have developed our digital business process framework. So now all the KCC renewals, as well as gold loans to the farmers, they are now based on that from the satellite land records. We are doing it. Going forward, we will, through API, our DBP will be integrated with that ULI and from the satellite images, because the satellite images gives the crop pattern, then the land area of cropping, then the fertility of the land, the irrigation facility there. So all these can be captured through this satellite images. And when our DBP will be integrated with that, then our entire agriculture advances based on land records and all these things will be digitized, end-to-end products. What happens actually, agriculture sector has been treated as a underserved. Because of that, there is no structured data, there is not verifiable records there. So earlier it has been treated as they're underserved. Now with this development, now not only our banks, I think other banks are also developing this model so that real-time granular credit assessment can be done for the uplift of the farmers, which has earlier been underserved. And second thing is that with regard to the climatic data that we are getting from that, both on the liability side as well as asset sides, we will develop that products and taking into the areas usually affected by the flood or any natural calamities. So proactive actions can be taken for existing accounts for restructuring or giving some help when there will be any climatic changes or when there will be some environmental hazards which is not really anticipated at the giving of loan at that time. So it is best for the agriculture. Likewise for MSMEs also, sir, using that GST data and their records of transactions. In our bank, up to we have a e-GST Express loan, up to 5 crore, it is end-to-end product. So up to 5 crore, we are giving loans to the MSME sector based on these GST data, as well as their bank statements and transactions. And third thing is that we are in tie-up with some cooperative society of milk procurement cooperative societies. And depending upon the data of procurement and the payments to the farmers or the persons who provide the milk to the cooperative societies, then bank can also give loan to these small borrowers, marginal farmers, for their business as well as, and this gives on their business transactions and taking the procurement log from the cooperative society. We are in the tie-up already with the some Rajasthan cooperative society, and 2-3 are on the pipeline. So these are the, in our bank, we are making our efforts so that using the alternative datas, how can we help the underprivileged and the small startup sectors.
Thank you. Mr. Rajiv, if I may add, as you're getting onto this topic, I mean, Mr. Salee touched about it briefly about going beyond credit, but if you can touch upon beyond the decision itself, right, in monitoring or in collections or cross-sell, where do you see the power of this playing out?
See, first of all, the entire data piece which we are talking about is towards enriching the banks or the decision maker to give frictionless service to the customer. Now, how fast and how frictionless I am able to provide that, that's more important. But having provided that service, as you rightly said, it is not only the one part where I say underwriting becomes easier. Now, what am I doing regarding monitoring? What am I doing regarding cross-selling, or what am I doing regarding upselling? So, if I look at it, there are huge amount of data which is available today. The digital footprint of individuals as well as companies are enormous. Now, if we are able to capture that digital footprint, is he making his utility bill payments on time? Is he spending the same amount of money which he was actually usually doing it earlier? All these, if he's going to a kirana shop where he was buying for X amount, now he's buying for X minus Y or X plus Y, that itself gives a lot of data inputs to the bank to have a proactive, you can say, early warning systems. Now, having said so that these are the early warning systems which are there, then we get cash flows there, data of how much cash flows are coming, what money is coming in, what money is going out, basis his EMI or collection, what is the route where I can route his collections, can I tap him with the collections? Then lot of investments we are doing. People are putting money in different sources, they are utilizing funds in different formats, they are saving in different routes. Can I do a cross-sell, can I do a upsell? Even going, registering with the NeSL for doing something where I say digital documentation has happened, but I can come, can I give him a mortgage loan, based loan or somewhere else? Now, all these data input sets give me a lot of opportunities to do cross-selling as well as upselling. Apart from that, the only thing is that the collection efficiencies can go up, the early warning systems can help me. On entire thing, this is helping the banking ecosystem to almost upskill their skill sets by 20 to 30% as of now. So that's how it is building up across the system.
Thank you. And as I come to you, Rakesh, what I'd like to understand is the tech that is required to pull this off, right? So there's data changing. You get into more unstructured data also now as we're speaking about satellite data and climate data, etc. So what kind of tech investments would you see going forward to kind of use all of this and leverage it in the most efficient way?
See, there's enough information which is available, or the data as we have been talking about. How do we really use the supplementary data into a primary data for underwriting, cross-selling, collections? I think that's the key. And for that, you need to invest in the analytics team, the AI, which we are trying to build, the machine learning in terms of building the scorecards. How do you underwrite the customer? So a lot of investment has to go in terms of decluttering. And also, what is the data which is risk ranking? There's a lot of information which is available, whether it risk rank when you underwrite the customer. I think, so there is something good to have, and something in terms of establishing the cash flows and the repayment capability of the customer. I think for that, investing in analytics team, investing in machine learning, investing in building BREs, which a panel mentioned in terms of building the scorecards, I think that's the investment which one needs to do. And going forward, I think AI is real, and in terms of most of the standardization or standard processes needs to move. So today, whether service, if you look at on the service side, a lot of things has moved to AI. In terms of collections, the first calling is done by, let's say, AI. In terms of automating the entire credit appraisal memos, there's so much more to be done. So a lot of investment has to go in terms of understanding the customer behavior, the repayment behavior, the cash flows, the seasonality which a customer goes through, the payment cycles, to really understand, determine the cash flows of the customer and the credit worthiness of the customer. That's how we can really reach out and serve these customers much better.
And Prashant, you provide a lot of this tech, right? So from your lens as a provider of tech and platforms, how do you see the shape evolving? I mean, I'm sure investments that you're also doing to enable all of this for banks and how do you see that collaboration moving forward?
Yeah, so I think it's evolving and it's fairly complex because of the orchestration of all of these APIs, these data sources, and trying to kind of, you have to thread all of these data sources together to be able to actually extract meaning from it, right? Because over limited time period, or there could be heterogeneous sets, like you mentioned. So I think definitely infrastructure investments on the bank side and on our side are increasing. But I think what will also evolve is the model, because if it's AI, who's the primary model provider? Are we actually downloading a model and then training it ourselves within our closed data sets to keep all of this inside? If that is true, the infrastructure required to run a model that has 30 billion parameters versus 90 is significantly different. So it's no more a game of saying, the L1, L2 kind of a concept in terms of an RFP, because someone can say L1, but if they're using a 30 billion model parameter, then you're not going to get the same results as a 90 billion model parameter. And trying to understand and evaluate some of these things are also going to become increasingly complex. And so while we are investing in infrastructure and maybe even understanding how the pipe of all of this is going to work between, let's say, the fintech, ULI, bank, and all of these other parties, right? Like a standard digital journey today takes 20 to 30 integrations inside and outside a bank. So the security around all of this, the encryption around all of this. So yeah, I think infrastructure is going to go up. And it's also going to be frictional in the short run, because as more data sources come in, you have to design for workflows that cater to both, typically to what we see today even in account aggregator flows. So I think there'll be a fair amount of complexity that goes in over the next 3 to 5 years, but then it should standardize post that. In any case.
Deb, any last input from you before I open it up to the floor?
Yeah. So I'll just further elaborate on a couple of points which were raised during by my co-panelist. So one is mortgages. So in a very landmark development in 2022, the IT Act was permitted to even permitted transactions related to immovable property to be brought under its ambit. So effectively it means that even documentation for mortgage related loans, home loans, that can also be done in a purely digital form. And that is already being done by many housing finance companies and many banks as well. The second part, Mr. Salee was talking about data flow through APIs. So as of now, all the alerts which we are sending are through emails, but we are working with a few banks to also provide these alerts by way of secure APIs. Another issue, one of my co-panelists mentioned about agriculture loans. So agriculture loans can today be very seamlessly disbursed and documented in a totally digital form through the digital document execution platform of National E-Governance Services Limited. Incidentally, in this document execution platform, you can do the documentation related to 29 states in one single platform. So in one single platform in 29 states, you can do the documentation. And finally, one more aspect about a DD, I would like to say that the metadata which flows with the documentation, that is a rich data source. For example, the PIN code, we can do an analysis based on, and then we can arrive at some conclusions as to which parts of the country there are more disbursements of loan taking place. Then all these documents can be monitored centrally when these documents are due for revival. And also these documents are stored digitally, so the requirements of keeping of safe and other things are totally dispensed with. Finally, this, my friend Mr. Salee talked about e-signing. Now, interestingly, e-signing can be done, the most conventional way is by way of a mobile OTP, but today it can also be done by a biometric, and we are soon going to launch even a face authentication method. So this would definitely help the banks address the NTC segment. So identification becomes much easier when execution happens through the digital modes, and especially the most secure form in which can be done is through the face auth method.
Thank you. Let me open it up to the audience in case you have any questions. Can we get a mic?
Mr. Chaudhuri, about the documentation, which is a very, very important point. And there has to be a proper understanding and synergy, not only in the people sitting here at the higher hierarchy of executive directors or MD or CEO, but the legal departments, which is the biggest hurdle. No higher official wants to interfere into the legal things, not even a word they want to change, than what is there in the legal. Today, every document, every transaction, we have to sign 20 to 30 signatures, and on one page also 5 signatures and initials, which has been going on still today also, in spite of all these developments. So the major hurdle here is to train the minds of those legal people. And to the legal people, to satisfy them will be very, very difficult task. Because they say, you don't understand legal things. Tomorrow we have to face in the courts. So while it's a very, very welcome thing, and we have been doing in some of the private transactions and with some private players, these digital signatures with authentication and everything, but how do you cross this hurdle of training those legal department people, along with them their advocates, and bring them on the table to see that the proper e-transactions, e-signing takes place in every document, that you have one PDF, you put just one signature, and that's all. So I see it because practically I am doing it day in and day out for my clients. Right. Even the ladies, you know, they are called and 20, 30, 50 signatures. I mean, if they are a partner or a director or a guarantor.
Can I respond?
So, yes, please. This is a very important point which I picked up.
I'm so happy that you have raised this issue, that a customer has to sign 20 times and sometimes more than once on a page. So in our digital document execution, you give your OTP or your biometric only once, and the system generates it and whatever pages you want. But I agree with you that there are some mindset issues, but I don't agree with you as far as legal issues are concerned. Let me tell you one thing. It took us a lot of time to address all legal issues. But today, all legal issues has been addressed, and every bank is today on this platform. We have 60 banks, including the largest bank of India, on this platform. The largest bank, the largest private sector bank. But I also agree with you that penetration is still very low. And this is basically because of mindset issues, and I think all the banks here are using our platform. So my humble request is just be a bit patient with us. Our banks are doing a wonderful job, and my colleague, my old colleague, Mr. Nair already mentioned about it. But please be a bit patient with us. It is happening. But the pace is a bit slow. I wish we would move a bit faster. But what I can tell you is that as a regulated entity, as a public limited company promoted by banks, we have the full infrastructure capability to increase the capacity of doing transactions. We have a full DCDR just like a bank. And we have fully upgraded ourselves to meet the requirements. And if you see some of the data which you are publishing on a website, every year we are going 100%. So that is the scale on which we are growing. But keeping view the scale of our country, it is still a bit slow. I wish we could go faster, but let me assure you, all my users who are banks are doing their very best. But there's lots more to be done, and I'm sure your comments will motivate many of us to do more.
So I would just like to add...
Sir, if you don't mind, we'll move on to the next question.
I would like to compliment all my banker colleagues, particularly as an old-timer in the banking industry. We are doing enough for the providing access to the customer. But are the customer really digitally literate that they use our facilities, particularly the last mile borrower, the incentive borrower? I mean, the issue is that are the facilities being used by those last mile where the credit penetration is really required? Because since morning, I think the discussion is on that the credit penetration is not happening, MSME is not getting the loans, and it's all because probably we have created facilities, but facility access part probably is a challenge. So are we doing something different so that the last mile can use the facility?
Sir, if I can answer your question. You very rightly said that last mile connectivity is one which is required. Today we have KCC journeys which a farmer can be in his farm and get the sanction done in a 5-minute time. But is he aware? That's the first question. And if he is aware, can he know how to do that? So there is a lot of training or education which needs to be done. Now bank, business correspondents, the FLCs, there are multiple ecosystems which are coming in place. They are trying to impart this education. Even the bank branches, where we say it is better to do a loan digitally than to do it because operational cost is high. If I do it on a bank branch, my operational cost is very high as compared to the digital STP journeys which we have built across. And then the data can be verified by, as I said, there's a satellite data, SatShosh data is there, land record data is there. Everything can be verified, which otherwise would have taken maybe a few days' time also. So education is going on. If I say, is it enough which we are doing? We need to upgrade it and we need to do it more. You rightly said that, but then the ecosystem is evolving, sir. That is what I can say. And the day is good. The awareness level in my last mile customer is also growing very fast. The new generation which is coming is more adaptive. They are most faster. So I think in the days to come, we will definitely have a meeting point where the things will be very seamless. I'm very hopeful on that.
Sir.
Good afternoon. My name is Vineet Nahata. I happen to be NEC member of FICCI and the chair of the task force on cooperatives of PSD Chamber. My question or observation would be directed towards Mr. Bibhu Prasad Mahapatra ji, who highlighted that PNB is giving a lot of attention and focus to cooperative societies. So my observation was that most of the cooperative banks, they give a perception that most of the cooperative societies and the allied bodies or packs, they happen to be servicing them as their focus area or key target audience. So in the new cooperative policy code, which was announced like a month ago by Mr. Amit Shah ji, the Honorable Minister, it was designed by Suresh Prabhuji. Over there also certain guidelines have been there. So I would like to understand whether there is an overlapping of businesses between the mainstream banking sector represented by a bank like yours and the cooperative sector. Thank you.
Just I have mentioned that we are tying up with the cooperative, that is milk producing cooperative societies, and in coming days also, sir, we will also see that the legality also, and we are developing that API. So it is will not make any product or any process which will be cannot be legally not legally binding. So keeping in with the legality of that whatever now developed, and the keeping in view the requirement of the small farmers and so developing that structure, it is under process, and with the tie-up with the milk producing units, it will be operationalized, sir. But we have already tied up 3 cooperative societies, the milk cooperative society.
So this is a very welcome move. Actually, banks' participation in lending towards the cooperative sector is very welcome, and this sector is a sunrise sector which is going to grow manifold and is going to become a great contributor to India's GDP in coming days, sir.
Thank you, Vinny.
My question is directed towards the lender, Mahapatra ji, Mishra ji, and specifically to Debajyoti ji, who has played a good role in IBPI. In last few years, in last 8 to 10 years down the line, because of the growing NPAs, we have given a lot of focus on the NPAs and the bad loans. How do you see that if we would have given the focus on the new loans, doing the proper due diligence of that at that point of time, this problem would not have arisen? But at the same time, if we are tightening up the process, then definitely the growth and the inconvenience to the customer will happen, and definitely the customer will drift and the growth will also drift. So how do you see that? What can be done? What should be the solution which is hands on hands and which will bridge the gap where we can have the sustainable good credit, but at the same time we are not stalling the growth? And at the time when the consultant, you are hiring the consultants, but at the time of the loan itself, the responsibility of the fees has not been taken by the lenders and the customer does not want to pay the fees. So all those things are also is a very crucial issue at that point of time. So please answer on that particular point of time.
You are rightly told that earlier, because of lack of structured data, so the credit decisions is being taken on the informations provided by the customer, and it was based on the collateral security based. All of are aware of that. We don't have that mechanism for assessing the repaying capacity or their informations, the structured informations. Now with digital innovations and the fintech companies coming to play, now all the datas, that scientific datas can be come to the bank's fold for taking a conscious decision and also assessing the risk factor in that credit proposal, lending the proposals. In addition to that, in addition to the underlying, underwriting the credit proposals, we have all the banks now developed the system of collection mechanism as well as recovery mechanisms. So, based using the AI ML, you can also have the advanced technology for follow-up of actions with the borrowers depending upon their behavioral pattern. So, small nodes, digital nodes for the low risks, then phone calls or call centers involvement for the medium risk, and field visits where there is a high risk portfolio. So now banks has developed technology for collection mechanism also.
How to mitigate those solutions, but customer is good, but one lacuna is coming, and that is how we are not able to move ahead. So how to have the level playing field?
Just in the interest of time, I know this discussion can get very interesting and deep, but in the interest of time, I think we need to move ahead as well.
If I may just quick addition to that. We were talking about the business rule engines, right? The business rule engines have drastically improved the quality of the appraisal because the data is now available. The same business rule engine which can give you a proper credit decision can also be used to predict stress in advance. I think it's a logical calculator, which understands the behavior of data and sort of give you a prediction, give you a sanction, can also predict whether if this particular borrower is getting into a stress situation, and that prediction can happen 12 to 15 months in advance. See, what's happening, ultimately to sustain it, you have to throw resources behind what I was mentioning about the collection machinery, right? We need to have a proper collection machinery. But now the BREs will give you the ability to focus their collection machinery only on a segment where you anticipate stress. So it is, your appraisal is going to be quality of the appraisal is going to go up, And this is also going to give you an ability to focus on the stress segment, which makes it, if you ask me, sustainable.
I sincerely apologize to those whose questions I'm unable to take. I've gotten a lot of warning signals from here. So I'd like to thank all the panelists on the stage for a wonderful discussion. I think it's intriguing to see the journey as we go forward of the investments that we make in the banking industry and the lending industry and go beyond credit decisions as well. Thank you so much for your time.
Thank you. Thank you very much for the engaging and insightful deliberations. May I request you to kindly come forward, sirs, for a group picture. Ladies and gentlemen, please be seated. I have an exciting news to share with all of you. Please be seated. So we have a lucky draw, which is sponsored by Indigen Labs, known for cutting-edge AI solutions. We'll be collecting your cards from the seats here. So who are available in the hall now, only they will stand a chance to win the lucky draw. The winners will be announced after the last session. And so please be seated. We'll be sending a support staff here to collect the cards. So you have an exciting chance of winning a wonderful gift today. There are 5 delegates. 5 delegates can win these gifts. So please be seated and take advantage of this lucky draw. Thank you very much, sirs. Thank you. Ladies and gentlemen, we now move on to the next and the last panel discussion of the day.